Alasdair, do you think the markets, bonds, stocks, commodities, huge derivative positions, and fiat currencies are all primed and imminently due for a massive historical correction?
Yeah, I mean, the root of it is interest rates and bond yields, because all financial asset valuations take their cue from the yield along, in the bond market, whether it's sort of short, medium, or long term. And I mean, just look at the rate of inflation, price inflation. We're looking at rates which in Europe are over 10%, in America are about 7%. That's official, probably somewhat higher in reality. The hope is that, and this is the central bank's hope, that it's going to drop off and come back to, 3% rather than 2%. I think they're now saying, oh, come on, this is just wishful thinking. I mean, anyone with a half a brain can understand that with all the expansion of credit at the central bank level, they've just basically debased the currency, which is reflected in continuing rising prices. But we're in a bit of no man's land at the moment, because you've got everybody expecting the Fed to pivot. If they can, they will. That I think we can be sure. But at the same time, this inflation problem is really very persistent. And what are interest rates? They've raised them to what? So 4.25% to 4.5%. Current rate of inflation 7%. Now, this isn't even dealing with the problem yet. If you're going to compensate the foreign exchanges, who will be looking at the yield on their dollars, if you're going to compensate them for the loss of purchasing power of the dollars, you're nowhere near it yet. Nor, incidentally, is the Bank of England, nor, incidentally, is the Bank of Japan, nor, incidentally, is the ECB. So all the major central banks have exactly the same problem. They're just trying to sit on the whole thing and not exacerbate the problem by raising interest rates unnecessarily. I mean, we've got a lot of jaw about how, we're going to be tough on interest rates. We're going to raise it 0.75%. And, now we're raising it 0.5%, but we're not done yet. This is all talk. I mean, it's, the fact of the matter is that interest rates have not caught up with the debasement problem of the currency. There's still more to go. And as to, was it Paul's point about financial assets, that means that the yield on government bonds, from which everything takes its cue, has further to rise after a bit of a pause, maybe. Yeah, sure. We've been having that pause for the last year. Well, not quite last year, really from about October. Yeah, I mean, when yields start rising again, bond yields start rising again, that means that bond prices fall. It means that equity markets fall. You will get increased bankruptcies because there's so much in the way of malinvestments in every economy. So the risk, if you like, the risk spread between, sort of bond yields and equities is going to increase as well. I mean, I just can't. I wouldn't be able to justify telling anyone to buy equities at this level, because I just see there's just, I can see what's going to happen. Anyone can actually see what's going to happen. But, there's always a latency in markets. And we see this particularly in cryptocurrencies. I mean, whenever I comment on cryptocurrencies on Twitter, I get people coming back saying, you should stick to gold. You know nothing about it. They're in denial is the answer, Donegan. Just complete denial. And there's the same with bonds and equities. I mean, if you want to be in a market which has got the potential to fall as much as it fell between 1929 and 1932, then good luck to you. But I wouldn't recommend it. That is for sure.
Well, there's an old saying in the preparedness community, I'd rather be 7 years early than 1 day late. In other words, when you're making preparations for a potential upset, you don't want to wait until it actually happens and then think, I better get ready for that storm or that whatever it is. There's a question here from Tom Varco who said, Alasdair, in a previous year, you said the dollar would collapse by year end. I think it was maybe a banking collapse, reminiscent of John Law. It didn't. And how do you see that situation now? So many people appreciate your great work. Thank you.
Well, it's very kind of you to say so. Timing, I think I can pretty much see which way things are going, but timing is always, that's the one thing we would love to know. We would all be terribly rich and we wouldn't be wasting our time, doing podcasts and telling everybody, what we think. Timing is always the difficult thing, and it's generally a mistake, and it's a mistake trap I fall into as well, to underestimate the ability of the authorities to put off the inevitable, and that happens all the time. We've had a GSIB rescue already, which was Credit Suisse. That went really very smoothly. I think very few people actually noticed it. But we will have other failures, and that will test us. I think that the increase in the yields on the 10-year Japanese government bond and the Bank of Japan's policy on that could be the beginning of something which gets out of control. We got so many other things which just basically don't look good. And how we're going to deal with it is going to take, it takes time. But the one thing that I do know is that we have a cycle of bank credit. When bank credit starts contracting, that is when you get a crisis. And you don't get a crisis every time, but in the current situation, with banks' balance sheets more highly leveraged than they have ever been in the past, this crisis promises to be something larger than we have ever seen. Well, certainly since the 1930s. You could say even including the 1930s. The landscape is very, very different, so you can't make a direct comparison. But yeah, I mean, this is a very dangerous situation, and the authorities are desperate to retain control. And we get everybody saying, "Oh, there's going to be a reset." Now, why are they saying this? They're saying this because they realize that things aren't working as they should. But of course, the mistake that most people make when they say, calling for a reset, is they think governments just need to sort of somehow move on to a different page and it'll all be all right. That's not how it works. You could have said that we should have had a reset in 2006, 2007, when we began to see that liar loans and all the rest of it, we see which way that was going. Well, let's have a reset, then nobody need go bust. Oh, come on, this is wishful thinking. Actually, what the reset is the market starts intervening and it imposes reality on monetary policy committees and also governments. And, it's a wake-up call. And that's going to happen again. But this time, the question is, what is their reaction going to be? Are they going to try and save the economy, or are they going to try and save the currency? And it's, as far as the currency is concerned, with the dollar, this is a very serious situation, because the rest of the world has realized what the dollar is. It's a scam. There's no other description for it. They've got something like 32 trillion invested in dollar assets, treasury bills, and bank balances, all in dollars. 32 trillion. No, that's more, a lot more than the United States gross domestic product. And there will come a point where suddenly these foreigners aren't going to be patient anymore. They're not going to sit there and get, sort of minimal interest rate while the dollar's going down. They will sell it. And that's another source of crisis. How does the government fund itself when the foreigners are unwinding their positions? What does the Fed do? Does it stand to one side and say, we're not going to do quantitative easing because at the moment we're in quantitative tightening? Now, come on, this is not realistic. There is a lot, I think, that is going to go wrong, and I can't see any way in which it can be avoided. And the key thing in this is to understand the consequences of rising interest rates. All that expansion of credit that happened from 1980 through to 2021, that is now being reversed. And the consequences of that are going to be extremely serious for everyone, not just Americans, but for everyone around the world.